Well, neither of these bank presidents violated the existing rules. I think the rules are going to have to be changed. It is a perception issue. In the case of Rob Kaplan, who's a very good policymaker and an excellent successor to me, did even better than I did, I think, in terms of managing the bank and the business of the bank. The complexity of what he did, the timing with which he did it, raises perception issues, and it's basically a risk mitigation strategy using calls and puts, which is almost incomprehensible to anybody that looks at the system, doesn't understand finance. And it was timed very poorly. So it was an error of judgment. He didn't violate the rules. I think he made the right decision. I think Eric made the right decision also, given his kidney problems, although he was going to retire in a couple of months more. So now it's up to the Board of Governors, and very importantly, to the Federal Reserve Bank boards, the Dallas board, to create some new boundaries, new baselines. But please don't misunderstand. Neither of them broke the rules. They just had bad judgment here, and they're paying the price for it. I hate to see them go because they're both very good on the FOMC. They're independent thinkers, and I hope that the replacements will reflect the same values.
Yeah. No, listen, we understand that we have rules in place here at CNBC in many ways for the same reasons, Richard, which is not necessarily because we think somehow that we're going to buy stocks and benefit from it as much as the perception that we might even do that. But that goes a long way, doesn't it?
Yeah. Yeah, it does. Again, I did it differently when I was there in a crisis of 08, 09. Instead, I bought rare editions, the first editions, rare books, the McKay's Extraordinary Popular Delusions, all of Churchill's first edition, et cetera. You know, I suppose you could stretch that and say I violated my knowledge, but I don't think it affected the book market. And others chose, in this case, REITs in Eric's case, and stocks in the case, and puts and calls in the case of Kaplan. But yes, I do think the rules need to be changed. They will be. And I'm pretty sure that the Board of Governors will work with the banks to make sure that this doesn't happen again.
Before we move on to other topics, Richard, I mean, just to stick with this, you mentioned the fact that these were two presidents that were in many ways independent thinkers and very strong members on the Fed, in the Fed's composition. What do you expect that replacement process to look like? Because, I mean, I'm seeing a lot of notes from Wall Street this morning saying that there's potential dovish risk from the Fed personnel changes, given the fact that you're talking about two presidents that were some of the lone voices on the committee that highlighted potential risks around financial instability and the like.
Yeah, as you know, I like that because that was one of my roles when I was there. It's up to the boards of the banks. You have to remember the selection is made by the boards of directors of those two banks and all the 12 Federal Reserve banks. The Dallas Fed tends to look for independent thinkers, and the Boston Fed will certainly want to find someone that's as strong as Eric to replace him. He had a unique voice on the FOMC. He was carefully listened to, very independent thinker, and always spoke last of all the presidents, always wanted to go last. And when he spoke, he would summarize everything so succinctly and so well that everybody respected him. Rob also had a great voice. I know that Jay Powell held him in high regard on policy matters. So those boards, remember, these are independent banks. They're not part of the federal system. The way the system was constructed in 2013 is to have this federalist system. So those boards will make the decision, and let's pray that they get good men or women to replace these two that are departing, who were very good leaders within the Federal Reserve System.